A bill titled Siegel AmeriCorps Education Award Tax Relief Act of 2023 was introduced by Connecticut Representative John Larson on December 13, 2023. Section 117 of Title 26 in the United States Code covers the exemption of qualified scholarships from being included in gross income for tax purposes as long as the money received for the scholarship or fellowship grant is used for tuition and school materials of the subject being studied only. Gross income, for tax purposes, is the total amount of money earned by a person through labor, pension, retirement accounts, interest on money accounts, or investment dividends and returns, which are the most common kinds of income. This amount is not what is being taxed, but is directly related to it as it goes from gross income to adjusted gross income to taxable income. In short, the higher the gross income is, the more taxable income a person might have, depending on their tax credits and their placement in use of money. This section explains that payments to the student for any teaching, research, or other services performed, even if they are a condition of the scholarship or grant, are not exempt from being included in gross income for tax purposes except under certain conditions as addressed by this bill. Currently, if the student receiving the scholarship or grant is under the following institutions, the earnings that are not normally exempt from being included in gross income for tax purposes will be exempt. The National Health Service Corps Scholarship Program. The Armed Forces Health Professions Scholarship and Financial Assistance Program. A comprehensive work-learning service program operated by a work college. This bill will now add students earning a scholarship or grant from any national service educational awards as being exempt from their teaching, research, and other related services income being included in gross income for tax purposes. This action is also repeated in the National and Community Service Act of 1990, which is recorded in Title 42 of the United States Code in Sections 12601 and its following letter additions, meaning Sections 12601A, 12601B, and so on. This bill will take effect starting in the taxable years that end after the bill is passed, which means if the bill is passed before October, it will apply to the current taxable year. Primary impact: students that are enrolled in college under these programs and scholarships or grants will now have more money retained by not being required to pay taxes on that income. Secondary impact: although the impact is small, there will be less flow of money to the government through taxation.